You want to start a business, but there's so many different type of business structures. They're all so confusing. You have no idea where to start. So in this video, I will break down the different type of business structures to try to help you understand which one may be best for you. I'm also going to break down the advantages, the disadvantages, and what the tax implications are for each. So let's get into the video. But before we get into this video, I got a quick disclaimer. I am not a lawyer nor a tax accountant. I run several successful businesses where I have lawyers and accountants assisting me with managing and keeping my business compliant. So before you go ahead and make any decision to form a business, please make sure you consult with a business lawyer or an accountant to help you set up the right business for you. The first type of business structure is a sole proprietor. A sole proprietor is a business which a single individual owns and operates the business and is the single most common type of business entity that can be formed in various industries such as consulting, handyman type work, any type of freelance work, and retail, just to name a few. So what are some of the advantages of being a sole proprietor? The first type of advantage is it's easy to set up. No real legal paperwork required or no need to file any formal documentation with the government. Number two, you have complete control over the business operation and all of the decision making. Number three, the tax benefits of a sole proprietor is that it allows you to claim business losses on your personal income tax return, which can help you reduce the overall tax liability. Number four, it's very cost effective. A sole proprietor is typically less expensive to set up and maintain than any other business structure. So what are some of the disadvantages of a sole proprietor? One is that you have unlimited liability. A sole proprietor is personally liable for all the debts and obligations that the business incur, which means that your personal assets are at risk if you cannot pay the debts of the business. Number two, you may have difficulty in raising capital because you cannot issue stock or any other securities to invest in order to build equity within the business. Number three, it has limited life. The business may end, the sole proprietor pass away, the business dies along with it. This can limit the value of the business, which can hinder you from passing it on down to your heirs. Now, here are some of the tax implications when it comes to forming a business as a sole proprietor. As a sole proprietor, you are responsible for paying self-employment tax, which includes Social Security and Medicare. The self-employment tax rate is currently 15.3%, and it all falls back on the sole proprietor's income from the business. Think of it like this. When you're an employee, when you pay taxes as an employee, you only pay 7.5%. Your employer pays the other 7.5%. So as a sole proprietor, you're paying the employee side and you're paying the employer side when it comes to employee taxes. You must file your personal income taxes and report your business expenses and losses on your Schedule C to stay compliant within the tax regulations. A sole proprietor must keep detailed records of their income and expenses, maintain separate business and personal bank accounts in addition to credit cards, and keep track of your business-related expenses. One way to manage your income and expenses is through an accounting software. What I use within my business is QuickBooks. We use QuickBooks for construction to manage our income and expenses. However, you should always consult with a business tax professional or a tax accountant. You want to make sure you're filing your taxes correct, and you want to make sure you stay compliant with the IRS. You don't want them to come and audit your business. So to sum it all up, a sole proprietor can be an attractive option to start a business due to the ease of the setup and tax benefits. However, it also comes with a risk, such as unlimited liability and difficulty in raising capital. As with any other business structure, it is essential to weigh the pros and cons and carefully seek professional advice before you make any final decision on what type of business you're about to form. The second type of business structure is a partnership. A partnership is a business structure where two or more individuals share ownership of a business and they are jointly responsible for its operations. A partnership can take various forms, including general partnership and limited partnership. So what are the advantages of forming a partnership? The first advantage of forming a partnership is that you have the shared responsibilities and you can divide up the responsibilities according to the strength and expertise to allow more efficient management and operation of the business. Number two, you have more resources. With multiple partners, you can access more capital, more knowledge, more skill, more things to help you grow and scale your business. Number three, partners are taxed as a pass-through entity, which means that the profits and loss flow through the individual partner's tax return. This can result in lower taxes compared to any other corporation. Number four, partnerships can be flexible in terms terms of ownership, allowing partners to adapt quickly to the changing business environment. Here are some of the disadvantages of a partnership. Number one, each partner has a personal liability obligation, which means that their personal assets may be at risk if the business cannot pay its debts or face any legal action. The partner must share the profits of the business, which can lead to disputes over compensation and decision making. Sometimes money can definitely ruin friendship. Make sure you have contractual agreements between you and your partner so that way you understand what the rules and regulations are of the business, what the salaries are, so that way everything is clear up front. Partners may have a difference of ideas. They may have a difference of goals. The business can go in separate directions. This can cause a conflict and disagreement when it's trying to make decisions on your business. Partnerships are required to file an annual tax return, form number 1065, which reports the partnership's incomes, deductions, credits, and other information. Each partner receives a Schedule K1, which reports their shares of the partnership income, losses, and deductions. Partnerships do not pay income tax at the partnership level, but the individual partners are responsible for paying taxes on their shares of the profits in the business. Just like a sole proprietor, you need to stay in compliance with all tax regulations, so consult with a business lawyer or a tax accountant. If you want to learn how to make your business become bankable, click the link in my description box below, where it'll take you to my 6 steps to success, where it will show you how you would need to set your business up, how your business has to be formed, the little nuances that your business needs to have in order to get maximum funding. So click the link in my bio. The third type of business structure is an LLC, which is better known as a limited liability corporation. It is a flexible business structure that combines the liability protection of a corporation with the tax benefits. LLCs are the most common business structure to form because of their simplicity and the ease of their formation. So what are some of the advantages of opening an LLC? The owners of an LLC is not personally liable of any of the company's debts, obligations, protecting their personal assets from any of the business liability. Number two, you can tax yourself as a sole proprietor or corporation, depending on the needs and goals of the business. An LLC have fewer formal requirements and restrictions, less than a corporation, allowing for more flexibility in business operation and decision making. Number four, it's very attractive to investors. LLCs can issue membership interest to vendors, or it can issue membership interest to investors, which can be more attractive than the traditional stock offerings. So what are some of the disadvantages of an LLC? Although an LLC have fewer form requirements than a corporation, they still have some administrative obligations in maintaining accurate records and filing your taxes on time. Number two, an LLC may dissolve if one or more of the members leave the company, which can disrupt the operation and affect the business value. Number three, LLC members are subjected to self-employment taxes on their shares of the company's profits, which can be higher than the taxes paid by a regular employee. LLCs can choose to be taxed as a sole proprietor, partnership, or corporation, depending on the needs and goals of the LLC. Just like any other business structure, you should maintain accurate records, manage your income and expenses, and other financial transactions, and file your taxes on time. Make sure you consult with a business lawyer or a tax professional to help you out in those areas. My fourth type of business structure is a corporation. A corporation is broken down into two different subcategories. One is an S Corp, the other is a C Corp. When you first form a corporation, you establish as a C Corp. You have to elect to become an S Corp by filling out Form 2553 as soon as you form your corporation. You download that file from the IRS.gov, fill it out, and mail it off to them. A corporation is a legal entity that is separate from the owners or shareholders and is taxed as a separate entity. Corporations can be formed for profit or non-profit, and you could have unlimited owners. If you want to gain access to capital, large amounts of capital, you need to form yourself as a corporation. Also, remember, you must consult with a business lawyer or a tax accountant before you decide to open up a business. You need to understand which business is right for you before you open it up. So what are some of the advantages of a corporation? Number one, the shareholders are not personally liable for the corporation's debts and obligations, protecting their personal assets from business liabilities. Number two, you have access to more capital. Corporations can issue stocks and bonds to raise capital to make it easier and attractive to more investors and secure more financing for your business. Number three, a corporation can exist indefinitely even if the shareholder leave or pass away, providing stability for that corporation. Number four, a corporation is usually viewed as more credible and trustworthy than any other business structure there is out there. You can attract more customers and partners, especially investors, but for every pro, there's a con. Here are some of the disadvantages of a corporation. A corporation have more formal requirements and restrictions than any other business structure, such as holding annual meetings, keeping accurate records, filing your taxes on time, and also filing your taxes correctly. Corporations corporation also have to do a bicentennial update every 2 years just to make sure the business is still formed, the address and the names and everything is still the same. The cost to maintain a corporation can be more expensive than any other business structure. Due to the formal requirements and administrative obligations, corporations are taxed as a separate entity, which means that they file their own taxes and pay their own taxes through their own profit, and the shareholders are taxed on any dividends they receive from the corporation. This can result in double taxation, which is a disadvantage of the corporate structure. To stay in compliant with tax regulations, corporations should keep accurate records of their income and expenses and other financial transactions. Make sure you file your tax returns on time and make sure you file your tax returns annually. A corporation should also consult with their tax professional, like an accountant, to ensure that they're taking advantages of all their tax deductions. You should also ensure that filing your taxes correctly. Corporations provide many advantages, including access to capital, perpetual existence, and credibility. However, they all have some disadvantages, such as formal requirements, double taxation, and the cost to operate the business. As with any other business structure, it is important to carefully consider the pros and cons and speak to a professional before you make any final decisions on forming your business. Now, under the umbrella of a corporation, you can elect to become a subchapter S corporation by filling out form IRS 2553. An S corporation is a business structure that provides many benefits of a traditional corporation while allowing the pass-through taxation. This means that the profits and loss of the companies are passed through the shareholders' personal tax return rather than being taxed at the corporate level. So you're not double taxed as an S corporation. So here are some of the advantages of an S corporation. It's similar to a traditional corporation, but an S corp offers limited liability protection to the shareholders, protecting their personal assets from business liability. Number two, an S corp is not subject to double taxation as profits and loss are passed through to the shareholders' personal tax returns, allowing for the potential for tax savings. Number three, an S corp offers more flexibility in business operations than traditional corporations with fewer formalities and restrictions. Number four, the traditional corporation, an S corp is viewed as more credible and trustworthy than any other business structure, which can attract more business partners and investors. Like any other business structure that you form, there's always going to be some tax implications. So here are some of the tax implications for an S corp. An S corp is taxed as a pass-through entity, meaning that the company's profits and loss flow through the individual shareholders' personal tax return. Shareholders pay taxes on the shares of the profits at the end of the year, potentially resulting in lower taxes than traditional corporations. Like all the other business structure, an S corp needs to stay compliant with tax regulations by keeping accurate records and reporting your income and expenses annually. The last type of business structure is a C corporation. A C corporation is taxed as a separate entity from its owners. It also provides limited liability protection to its shareholders. So here are some advantages of a C corp. A C corp provides limited liability, protecting the shareholders, meaning that your assets is usually protected from the liabilities of the corporation. You can also have an unlimited number of shareholders, allowing for the potential raise of capital very easy and the ability to issue public stocks. Number three, a C corp can deduct certain business expenses, including salary bonuses, employee benefits, which can result in an overall tax liability for the corporation. Number four, a C corp can have perpetual existence, meaning that the corporation can continue if either one of the shareholders leave or pass away. One of the disadvantages of a C corp is that it's double taxed. It's taxed at a corporate level and it's also taxed at a shareholder level when you distribute money to yourself. Some of the disadvantages of a C corp is subjected to double taxation, once on the corporate level and then again when the profits are distributed as dividends to the shareholder. Number two, a C corp must also hold annual meetings and keep up-to-date records, accurate records, file your taxes annually, and file your taxes on time. Number three, a C corp can be more complex and expensive to set up and maintain compared to any other business structure there is out there. Now, here are some of the tax implications when it comes to a C corp. As we mentioned before, there's double tax, once at the corporate level, then again at the shareholder level through distribution and dividends. So in order to stay compliant with federal tax regulations, make sure you keep all your accurate information. Make sure you keep your paperwork and books up to date and file your taxes on time. Consult with a business lawyer or a tax accountant to help you out. So now that we covered all of of the different type of business structures, I suggest you do further research. I can't stress enough to consult with either a business lawyer or a tax accountant to help you further understand what you're trying to get yourself into. So depending on any type of business structure you decide to open up, just make sure you do a little research and consult with someone professional so that way they can steer you in the right direction. Opening up the wrong business can hurt you, can damage you, where you can actually pay more in taxes when you're trying to reduce taxes and build wealth for your family. So make sure you do research. I can't stress that enough. My name is Taurus the General, the business coach, and I'll catch you on the next one. Peace.